All right, this is Sean. It's 19 August, about 9 a.m. So pre-market update. I'm just going to go over the major indices, S&P, NASDAQ, and I'll also cover the Russell as well. Go over the VIX. So again, it's Tuesday. So yesterday was Monday. We had a pretty strong up gap in the market. And actually followed through quite well. So we talked about Friday's action, that Friday's high was going to be a key area, and basically this is a cash, so obviously the SPY actually would show the gap better. But yeah, we gapped up. I mean, here's the no kidding. The real session gapped up right at that level, and then market followed through. So pretty impressive. Like I said, it definitely felt, we all felt that underlying strength in the market last week, and even though a lot of people calling for tops and head and shoulders and all sorts of nonsense. That being said, I mean, here's the McClellan oscillator, which has had a pretty good run here. It's getting into these higher bands, which is basically technically an overbought sort of condition. I mean, we're just penetrating now, so again, I'm not going to be here telling you, hey, short this market or whatnot. But that being said, this little rally here may be short term getting a little long in the tooth. But we'll see how things go today. I mean, it was definitely some really positive action yesterday, getting to this upper area of the resistance here, which would basically be all-time highs. So it kind of makes sense for the market to kind of stall out here, maybe take another dip lower to test, and I guess your upper level support would be Friday's high, so short term anyways. So that is roughly 1964ish, so we'll see how that holds. Then the next level of support would be then the close on Friday, or even yesterday's low, which I'm looking at the cash, so obviously it's kind of a flawed, because we gapped right at that level. So really that's the level to Friday's high right now, should be short-term support. And then these moving averages as well, the 50-day, 21-day should act as some sort of support in here, if for any type of pullback. People have been short in this rally, they're just begging to cover. But again, I think the pain trade just continued this, even a low volatility, just grind higher would probably be the pain trade. And the market usually likes to be the most painful as possible for everyone involved, right? Your momentum traders would be painful for. It'd be painful for the shorts. Wherever the market is overweighted in who's playing this market, that's where the pain's going to be, right? So, but without any further ado, that's the S&P. That's what we'll be watching. NASDAQ, pretty impressive, broke above these highs. So, nothing new as far as we kind of knew the NASDAQ was the strength, and sure enough, it broke above. So again, short-term support would be Friday's high, and which sort of corresponds to these levels up in here, right? So 44.85, 40.46, 40.42. So somewhere in that range should be our short-term support, which again corresponds with yesterday's low as well. A little bit further down, we can even lean on Friday's close, and then these moving averages down in here as some sort of support. So again, the oscillator is the McClellan getting a little bit overdone. Even the VIX oscillator is sort of playing with these lower bands here. So, and one thing I did notice yesterday, there were, I put out a tactical setups and whatever, and classic momentum type patterns, but they didn't work out real well, right? So even though the indexes were making new highs, and everyone's singing and dancing. In fact, I listened to a market update yesterday where the commentator was basically giddy, about the recent action. So that tells me, meh, maybe short term we're a little overdone. The market could definitely use a rest. Tesla was one of them that I was like, hey, this thing, and sure enough, took out the level. In the Twitter sphere, everyone's all bullish of this thing, and it just went flushed. So something like this. Now, the next, I think it's even down pre-market, even though the futures are up. The key level here is gonna be 258.5. They can't hold that. Next level is down here. Last week's low at 254ish. So. Hopefully if you did get it and you got out of it real quick, I talked about last week the BIDU trade. This is exactly sort of like the BIDU trade. Didn't really do anything, right? Peaked up, came right back in. It's painful, and if stock's not acting right, the quicker you see it's not acting right and get out of it, the better you're going to be, right? So even in BIDU, you look at the indexes, we're up here. These things some of these high beta names are having some trouble, and so that's maybe the warning sign. Who knows? I mean, at the same point, there's definitely some rotation into other sectors like steel. I mean, I saw some steel stocks really making like Nucor. Obviously, look at this one. U.S. Steel. I actually bought it on this day. Got out of most of it. They had earnings, and boy, did I pay the price the next day. Should have put some sort of call. Should have bought calls instead of the stock, but I do have a small position in this. So these are the sectors that are running, right? Another one, SXC, STLD. So I have these longer term positions that I put into some of these stocks, because I definitely think steel has a potential here, even though everything's pointing to a weaker economy. I see something like steel, which has really been a laggard the last couple of years, actually catching a little bit of a bid, so we'll keep an eye on that. Anyway, so the Russell, so we talked about that. As we know, that was the weakness all in we had a big down move here, but what's interesting is we're right, yesterday's high is right smack almost against the 50%. In fact, we'll probably open right at that 50% in the Fibonacci. Perfect area to really, and kind of corresponds with this area in here. Probably a perfect area for it to at least stall out and catch some resistance, and maybe at best feel bullish, is look for some sort of consolidation here. Again, the oscillators are a little bit overdone, so just something, like I said, the risk reward is not to be buying, and like I was telling, the Tesla trade, and even though the indexes are going screaming yesterday, that some of these stocks just just if you're in the wrong sectors, it's kind of painful. Another one that I highlighted on the tactical was EXPE, and I mean for a momentum guy, this is all-time highs. This is like a dream for pattern, and then it went up, everything was looking great, and they flushed that one as well. So bit of a warning sign. If you're in this one, lean on today's low. If you're a short-term player, if you didn't get out yesterday, lean on today's low to get the hell out of that thing, because you don't want it to be like one of those things where a week from now it's down in the lower 80s, and that was your warning sign. Things things are acting right. It would be like the GILD trade, and they would never challenge the breakout level and just scream up higher. That's the only play I can play. I'm not smart enough to play that intraday wash with the algorithms. They're much smarter than I am. So without further ado, that's your morning update. We'll see how things pan out today. The futures up, gapping up. The key for the morning is to watch that opening range, right? So if they take it from green to red and start pushing it, be careful, because there's plenty of potential air below. Remember the support. Your first level support's going to be yesterday's low, Friday's high, and see how it reacts at that level. On the other end of the coin, if they open them up and they keep pushing it higher, all right, then it's the easy trade. If you're long, you just let it go. But you know, even in that case, I don't expect a lot of volatility. I just, you know, yesterday was sort of that just grind higher, grind higher, grind higher, and you know, nothing too crazy. But you know, also in the end of the day, it's a pretty big positive day. So anyway, that's it. Thanks for watching.